Let's imagine something for a second. It's 2026. The entire global economy is this incredibly complex, messy puzzle. But one company, Nvidia, seems to be holding the map. While Goldman Sachs thinks they know exactly where that map leads. And today, we're going to break down their blueprint for you. This is a story all about riding the massive AI wave. And, the turbulent waters that definitely come with it.
But before we can even talk about Nvidia, we've got to understand the world that it's living in. See, Goldman Sachs Asset Management is looking at 2026, and they see one thing: complexity. We're talking about huge geopolitical shifts, brand new rules for trade, and central banks that are frankly pretty unpredictable. In an environment like this, finding a real, genuine engine for growth, that's the single biggest challenge for any investor out there.
So here's our game plan for this explainer. We're going to start with that big, complex macro picture, then zoom right in on the single biggest growth story out there, AI, and of course its undisputed champion, Nvidia. Then we'll tear down Goldman's bull case, get into this weird paradox that investors are facing, talk about the risks, and wrap it all up with Goldman's super ambitious plan for the company all the way out to 2028. All right, section 1. Let's really set the stage here. What exactly makes the world of 2026 so tricky for investors to navigate?
Well, it's pretty much a perfect storm of some really powerful forces. So in 2025, you had 9 out of the 10 biggest advanced economies, the G10, all cutting their interest rates. At the exact same time, we're dealing with a totally new trade situation where the U.S. effective tariff rate is hitting 18%, a level we have not seen since the 1930s. And just hanging over all of it, over $100 trillion in global government debt. These are the seriously choppy waters every single company is trying to sail through right now.
So, that's the multi-trillion-dollar question, isn't it? In a world that is so full of uncertainty and debt, where on earth do you find a powerful, reliable engine for growth? Well, the answer, as the market has overwhelmingly decided, is one single transformative technology.
And that, of course, brings us to the star of our show, Nvidia, the absolute darling of the AI boom.
The amount of money being spent on AI is, well, it's just breathtaking. The tech giants, I'm talking about Amazon, Google, Microsoft, what we call the hyperscalers, they are pouring hundreds of billions of dollars into AI infrastructure. And here's the crazy part. For 2 straight years, analysts have underestimated the spending boom every single quarter. Now, all that money has to go somewhere, and one company is sitting right at the absolute epicenter of this feeding frenzy.
So let's look at how all this hype and all this spending builds into Goldman Sachs' incredibly bullish case for Nvidia and what they see as the path to a $250 stock price.
Okay, let's ground ourselves in the real numbers for a sec. At the time of this report, the stock was trading right here at $174.19.
And Goldman's target? A bold $250.
Yeah, that's a massive 43.5% potential upside from where it was. So the question is, what is driving that insane level of confidence?
Goldman's case really rests on 4 main pillars. First, that hyperscaler spending we were just talking about, they don't think it's slowing down. Second, you've got new customers like OpenAI just demanding more and more chips. Third, Nvidia software creates this powerful moat around their business that's super hard for competitors to cross. And finally, Goldman is betting that the company will have a really smooth transition to their next-generation chip platform, which is codenamed Rubin.
But here, this is where the story gets really interesting. We start to enter what Goldman is calling the future visibility paradox, which is basically a situation where simply winning today just isn't enough anymore.
This quote from the Goldman analyst, it just cuts right to the heart of it. Outperformance from here will hinge on revenue visibility into calendar year 2027. What does that mean in plain English? It means the market has pretty much stopped caring about last quarter. It is now looking years and years down the road.
You have to understand, this is a massive paradigm shift for how people invest in this company. What's already baked into the stock price? The expectation that Nvidia is going to have a great 2026. That's a given. What matters now is proving that the growth isn't going to just fall off a cliff in 2027. It's no longer about looking in the rearview mirror. It's all about what the road looks like 2 years from now.
But of course, no company operates in a vacuum, right? Let's be fair and look at the other side of the coin. The rising risks and, of course, the rivals who desperately want a piece of this AI pie.
Goldman is very clear about the potential headwinds here. A slowdown in that massive AI spending, that's the big one. But you've also got the threat of margins getting squeezed as competition heats up, the risk of rivals chipping away at that huge market share, and, the ever-present danger of supply chain problems. And that competition is very, very real.
I mean, we are seeing some incredibly powerful custom-built chips coming from major players. AMD is in the game with its latest Instinct accelerator. Google is already on its 7th generation of its Tensor Processing Unit, or TPU, and Microsoft is pushing its own Maya AI chip. The thing is, these companies are no longer just Nvidia's biggest customers. They are rapidly becoming its biggest competitors.
So how does Nvidia defend its turf against these giants? Well, its secret weapon isn't just the silicon itself, it's the software. CUDA is the programming platform that millions of developers use to build AI applications, and it effectively locks them into using Nvidia's hardware, creating this incredibly powerful and sticky ecosystem that is very, very difficult for any rival to replicate.
And this brings us to the final piece of the whole puzzle: Goldman's absolutely stunning long-term financial projections for Nvidia. This is their detailed blueprint for the next several years.
Just take a second and look at this growth trajectory. Goldman is projecting revenue to more than double in just 2 years, from $215 billion in 2026 to over $500 billion by 2028. And here's the key to their entire argument. Focus on that 2027 earnings per share number, $87.50. That single number is the foundation for their entire $250 price target. This is the future that the market is trying to get its head around right now.
So there you have it. Goldman Sachs has laid out a very clear, incredibly optimistic blueprint. The company has the pole position, it has the technology, and it has a seriously powerful moat. But with rivals mobilizing and the market demanding to see years into the future, the ultimate question is still out there. Is Nvidia's dominance going to be a dynasty, or was it just a temporary reign? That's what we'll all be watching.